Okay, welcome to another episode of the Accidental Landlord. I'm your host, Peter McKenzie. And today we have a very relevant topic. We're going to talk about insurance claims. Obviously, we had the Palisades and Eaton fire not far from here. A lot of people lost their homes. So we're going to try to get some helpful information out to our listeners on what everything to do with a fire claim when you lost your house, which is obviously a very tragic thing. So we have a guest on the podcast with us today, Curt Bulloch, who has been on the podcast before, I think a couple of years ago. He is an insurance broker who we happen to work closely with, but he is an expert in all things insurance. So Curt, welcome to the show.
Thank you, Peter. Well, I wouldn't say maybe not an expert, but an educator. We've probably been overwhelmed with all the media and the attention that the fire claims have generated. But like any property policy, you want to look at the policy coverage by coverage. And when you're looking at a property policy, usually the first thing you see is maybe the declaration page. And on there, the coverages are broken out by each category. So usually the first line item you see will reference either dwelling or homeowner, and I'll say coverage A.
But before we get into the nitty-gritty of the super exciting analysis of the declarations page, I want to just set the stage a little bit for our listeners. And honestly, it probably doesn't even need to be set. But they lost roughly 16,000 homes, entire neighborhoods down in Palisades and then out east where the Eaton fire was. A lot of people are, literally overnight displaced, nowhere to go. So what I want us to talk about is, what does the process look like? Like, what is reality? Everybody knows, like, oh yeah, I have the insurance policy that they're going to help me rebuild my house. But there's a lot of space between you have a brand new house and your house just burned down, and there's a lot of frustration. And like you said, there's a lot of stuff in the media. I want to get into some of that stuff, just so people have a realistic expectation of what's going to happen. So let's start with this, Curt. What are the biggest you watch the news. We've all seen the stories. Insurance companies are, not paying claims or denying claims, or people are fighting over smoke damage, and there's all kinds of stuff like that out there. But what are the most common things you're seeing problem issues wise when people go make a claim on their policy?
Probably figuring out exactly what they had in the house under the personal property coverage. And then also the characteristics of the house. That's coverage A, but the personal property coverage, usually the claim adjuster that's assigned to the case or your particular claim from the insurance company will ask for receipts. Virtually, a lot of people don't save the receipts, but they were probably burned up in the fire. And then next you'd go to maybe pictures you had, and if those weren't burned up as well, you might have them on your phone, or they're stored in the cloud, or you had a video or a friend that was over and they took videos maybe at a social event. You had the house that shows the characteristics of the inside of the house, meaning the type of furniture you had, the finishings on the walls, the type of floors you had, and things like that. The more documentation you can get, the better.
And people aren't generally thinking about that when they have their homeowner's insurance policy. I know that's not the first thing that comes to my mind is take an inventory of my stuff.
No, not at all.
So, okay, that's good advice. There's a lot of talk about stuff's not happening fast enough. The insurance isn't paying the claim fast enough. What should someone expect from their insurance company when it comes to you made the claim? How long does it take to get whatever it is, that you're due? What does that look like?
Usually 30 or 60 days. They usually start providing you some resources for loss of use. That's another coverage on the declaration page of the policy. And in each one of those coverages will have limits. So you want to pay attention to those limits that are on there, because that's the insurance company's obligation limit that they're going to pay you out for that particular coverage. So, for example, in the loss of use, they may pay out a number of months or up to a dollar amount for you to move to temporary housing while the house is getting built. And then for personal property and furniture, they may release some of that money for the essentials that you need to live on a day-by-day basis.
Who makes those decisions? Who decides?
Claim adjuster does.
So is there anything you can do to make nice with the claim adjuster? Or, obviously in this case, my guess is all the claim adjusters are overwhelmed with all the claims. What's the strategy there for someone?
Well, take notes, ask lots of questions, and then stick to a timeline with the claim adjuster on when they're going to get back to you and follow up. So if you have a timeline on when you think you can get back into the property or at least plan and start construction, there's lots of parties that are involved, such as the city that does the remediation. If they're the ones that do the remediation on the lot, they get rid of all the toxic waste.
And that would be out of the control of the homeowner, though, right? And the insurance company.
Yeah.
Gotcha. Do you see people getting better results from their claims over someone who let's take two identical houses that burn down next to each other, but, one homeowner is really aggressive with the insurance company and one of them's not. Do they generally have different experiences with payouts and claims and types of things?
Yes. And it also depends on the carrier and the carrier's rules and how fast they process claims and how many people they have in the claims department to process those claims. And then some of the carriers will hire independent adjusters. And then you work through an independent third party that would provide information and act as a go-between you and the insurance carrier. It's not going to be an easy process. I mean, obviously, you're going to start a file with a big notepad and take notes on a daily basis when you have conversations and interactions with the claim adjuster.
Well, do you think how common is it for someone to get denied in the case where they lost their house in the fire, like where the insurance company says no?
Unless they didn't have a policy. If they had no policy, of course, the insurance company would deny the claim. But this isn't the first time in the last 10 years they've dealt with massive wildfire loss. So some of the carriers in Northern California and the Bay Area and some of the fires up here, I track some of the people who lost their houses. And most of them that I know were able to rebuild within a 2 to 3 year period.
So loss of use, do policies, and that's typically what's going to put you up in a rental house while your house is being built, correct? Mm-hmm. How do most policies address that? Do they put a cap on that, or is it just as much as you need up to the limit of the policy, or what does that look like?
They all have a cap, and it's up to the limit of the policy. So it could have a dollar limit, and usually the dollar limit is a percentage of coverage A, the dwelling amount, or they'll have months, a time frame. They could have 12 months, 18 months, 24 months. You
typically see that it's enough, or are people underinsured in that area?
They're usually underinsured because what happens, especially like this large fire in Southern California, you have a huge demand for property, and a lot of the inventory just got burned up. So you have a lot of people who need to find rental property. And so there you go. They have to go find a place that's affordable for them. And since the future's unknown on when they can get back into their house, they could be looking at 2 years, maybe 3 years.
Gotcha. What happens if they exhaust their loss of use and the house isn't close to being built? They're just kind of SOL. They have to just pay out of pocket, or?
Well, you could go back and ask the insurance carrier. I don't think they would give you any more money unless there was something in the insurance agreement that would allow them to give them more money.
So then they're on their own in that respect.
Right.
I think these things take way longer than everybody thinks they're going to take, and I would imagine that's a relatively common thing. I know when we had the Thomas fire in our backyard, it was there's still vacant lots up there. Obviously, those people probably chose not to rebuild, but it definitely takes longer. And this is such a hot button political issue, I think, especially because it was Hollywood, famous people, and entire neighborhoods burned down.
And it was on the news every day.
Yeah, much different than the fires I've seen in the past. I mean, there was an article that I saw about a State Farm. He was like a VP level executive with State Farm. And did you see this, where he went on a Tinder date? And they think I don't know, it was just the article I read, but they think it was a setup. So the Tinder date was recording him and asking him all these questions about the fires and what State Farm was doing. And I don't know if he had too much to drink or what, but he was basically explaining how State Farm is going to recoup a lot of this cost, and that it was, I'll put a link to it in the show notes, but basically he got fired after that. They published this video of him, and he basically was saying something to the effect that, they go to the insurance commissioner, they say how much they need to raise the rates by to offset the loss, and this is just how we do business, something along those lines. But we'll link it below. But they promptly fired him, which I thought was interesting to say the least. So let's talk about, you talked about public adjusters. Explain what that is for our listeners.
Well, if an insurance company doesn't have enough in-house adjusters to handle the claim load for property, they hire licensed public adjusters that are licensed by the Department of Insurance here in California. And I'm pretty sure a lot of them are bonded and they're registered with the Department of Insurance. You could go to the Department of Insurance and look those up and see who those adjusters are. But there's been a number of bulletins from the Department of Insurance regarding independent adjusters and also smoke damage claims.
Before we go, I do want to talk about smoke damage claims. What is an insurance ombudsman? Who are these people that you can hire as the policyholder to argue with the insurance company on your behalf? Is that an ombudsman or
could be, or it could be a public independent adjuster that you're paying to argue with the insurance company?
That somebody who would be representing you and not the insurance company in the process?
Right, but I think it all comes down to the evidence and the proof you provide about what's been lost in the home, whether it's personal property or the structure itself.
Mm-hmm. Gotcha. Let's talk about those smoke claims. So you said that, and I've seen some of this myself, that especially with the FAIR plan, there was like, well, let's not talk about FAIR plan yet. I want to talk about that a little later. But what are you seeing with the smoke claims, or what's the backstory with those?
Well, in the past, a lot of the insurance carriers, after the fires a number of years ago, were limiting the dollar amount, or they were excluding smoke claims on the property, or they had a time limit on submitting a smoke claim. But the Department of Insurance came out and changed that, and there's new rules as far as smoke claims go. And you could go and read the verbiage of that particular rule at the Department of Insurance's website.
What's the gist of it? They're covering less of it, or
no, they're covering more. So it's in the favor of the homeowner.
Gotcha. What about lawyers? When should a policyholder get a lawyer to go represent them and deal with the insurance company?
If you exhausted all your resources with the claims adjusters and you have a valid claim, you have documentation, you have your policy documents, and they're just not paying in a timely fashion, I wouldn't just rush out and hire a lawyer right away, because then you're adding another third party, fourth party, fifth party to the claim process that could slow it down. So just make sure you have a good line of communication and documentation with the claims adjusters for that particular carrier. And some of them move fast and some of them don't move too fast. But again, they want documentation about the house, the structure, and the personal property.
Yeah. Obviously, we've managed a lot of properties, and their insurance claims are a regular common thing that we deal with. I've seen insurance companies deny claims, and then our clients get their lawyer to send them a letter and, threaten to sue them and say they're not, following through with their end of the bargain. And it feels like most of the time the insurance company lays down and goes, okay, fine, we'll accept your claim. Do you have any insight into that or?
I mean, a fire is a pretty cut and dried claim. I mean, there's coverage on the policy. The house disappeared in the fire. It's gone, was damaged. Here's the policy limits. And then there you go. But if it's something that might be a little questionable or wishy-washy, then you're going to need maybe the help of a lawyer to help you push that claim or that part of the claim through. Since a policy has so many parts to it, such as the structure, the personal property, loss of use, liability, building code upgrades.
I guess there's no disputing whether or not the house is still there, right? Like this is not
right.
It is pretty cut and dry. I guess in some the claims that we're associated with generally aren't the house burns to the ground. There are other things that maybe aren't as cut and dry. Okay. Let's talk about the FAIR plan, and I want to talk about the state of the insurance market in California in general. I think everybody pretty much knows it's a mess and it's difficult to get insurance. Probably, affected your business dramatically would be my guess. Let's talk from a high level, like why are we having so many issues with insurance companies leaving or rates going sky high? Like give us the high level view of that.
Well, the FAIR plan is the insurer of last resort, which is administered by the California Department of Insurance. And they dole out who's going to get what policy on a particular property where it's located that they cannot obtain insurance from another carrier. So again, it's the last resort. You don't want to go there first. And again, those policies only cover the loss from a fire. They don't cover liability. They don't cover theft. They're not covering water damage or anything else. And like any other policy, it has policy limits. So you want to pay attention to those. and the maximum coverage is fairly limited on those. But as far as how they got to this point, well, a lot of the carriers left the state because they lost too much money on paying out claims and their premiums are too low. So they have to put in requests to the Department of Insurance for rate increases. If those rate increases are denied, then they can't offer a competitive product, an insurance product for that particular area. And that area could be a zip code, a city, a region of the state. And so now they're starting to revise all those rules and regulations. So those properties that are in a higher risk area, more brush, more trees, more exposure, older properties, then they're going to pay more. But as of now, that process is happening really slow. And so there's a lot of non-admitted carriers that come into the state, and it doesn't mean they're a bad carrier. It just means they're not affiliated with the California Department of Insurance. So the way you choose a good carrier versus between the two, the admitted carriers and the non-admitted carriers, is look at their debt rating. They usually all have a debt rating by AM Best, and so you want to go with an A-rated carrier, meaning they have financial capability to pay claims in a timely manner. So those carriers could be part of Lloyd's or another group outside the state of California.
Well, is California unique in the way it runs the Department of Insurance? Like, I think there are states that have insurance problems, but not all of them. Like, is this unique to California? If so, why?
A lot of people say it's the regulations they passed, some of the propositions back in the 80s that kept the insurance carriers to artificially keep rates low. And so they've kept them low too long. And due to the cost of construction, labor, and the wildfire risk, they can't raise the rates to where they should be to offer a competitive product. So I think it's been going on for well over 20 years.
What's the solution? Where do you think it's going to go?
Just like driving records. So somebody that's a good driver versus somebody that's a bad driver is going to pay more. A house that is in a high fire risk area obviously is going to pay more for insurance because they're in a high risk area. Whereas one that's in a low risk area will pay a lower rate.
And that's going to be new. That's not how it currently works.
Well, yeah, some of the new carriers that are coming on board, as well as the non-admitted carriers, are pricing the rate based on zip code, age, construction, type of construction, where the property is located. So they use wildfire mapping tools, wildfire interface tools.
And the Department of Insurance is fine with this, or they have to sign off on that, or what does that look like?
No, it depends if they're admitted carrier or non-admitted carrier. If they're admitted carrier, and then they have to file all these forms with the Department of Insurance for approval on their rates.
What's to stop a carrier from saying, you know what, we don't want to be admitted anymore? Can they do that or no?
Yeah, they can. So they can leave the state, and then they create a new entity, and they come back.
And does that happens?
Yeah, it happens quite frequently.
Oh, interesting.
We're writing lots of policies with non-admitted carriers who are good carriers that the admitted carriers won't take these particular addresses or locations. And are the rates higher? Yeah, slightly higher. But again, it depends on the location.
So basically the government has got in the way of the insurance industry. The insurance companies have said, okay, we're out of here. And then they come back, they hack the system, if you will, and get non-admitted, and then they come back and offer a...
Well, yeah, but it's usually not under the same name. It's usually another entity.
Gotcha. But I mean, in essence, they're being forced to do this to get around the regulation. Is that accurate?
Yeah, partially. Or they can just sit there and they can wait till the Department of Insurance approves their rates that they want to charge, and then they let them back in.
What do you see the people doing? Because people are upset, right? Like, people are mad about this. Do you see the politicians, like, changing the way they do it or becoming more favorable to the insurance companies so they bring them back? Or what do you think?
Well, it's a really slow process because you have such a large state and vast geography from, desert, coastline, brush, inner city. And so they have to come out with new rates and regulations for all these particular areas. So it's going to be a while. I thought we're all hoping it would be much faster and get approved through the Department of Insurance. But no, the process is still taking a while.
Let's talk a little bit about reinsurance. What is reinsurance? How does that work? Help us break that down.
So if a particular carrier doesn't have enough money in reserve to pay claims, then they buy what a secondary insurance policy in the secondary market called reinsurance. So once they exhaust their in-house claims reservoir, their bank account for paying out claims, then they turn those claims over to the reinsurance company, and then they start paying them.
And is that part of the problem? I was reading something that the reinsurance premiums are getting out of control, or they're leaving as well.
Yeah. So it's hard to get reinsurance, yes. And the rates for the reinsurance carriers are high. So again, the admitted carriers have to factor all these costs in when they're pricing a policy. And if they can't charge enough, then they're going to lose money. So therefore, they decide not to do business in the state. And then we're without a policy, and then we have to hunt and find a carrier that'll take us. And the price may not be favorable.
What do you think is going to happen to the people that their houses burn down and they just, because there is a segment of the population that says, screw the insurance thing altogether, I'm just going to be uninsured. What happens to those people? Do you think the government's going to step in, or FEMA or something? Is there anything for them?
The people that didn't have insurance?
Yeah.
Maybe. I guess it depends up to FEMA and the government. Just like, people that have floods and they didn't have flood insurance, there's usually some money. But the money is probably never going to be the amount to rebuild the entire house.
Okay, well, that's all very depressing. We talked a little bit about the FAIR plan. You're saying that's only fire coverage, so they get none of the other benefits, just the house is going to be rebuilt, and it's usually more expensive than a regular policy. Is that accurate?
It can be, yeah. I mean, more expensive than a regular policy, meaning it depends on what you're comparing the regular policy to. So if you compare it to price of what they were paying for a prior policy on that property, yeah, it's going to be more expensive because rates have gone up due to the cost of construction and labor. But then they would need to go buy what's called a difference in condition policy that would cover liability, theft, and water damage. So they may pay another $1,000 or $2,000 a year for a companion policy to go with the fire policy from the FAIR plan. So
you just start piecemealing together all the insurance. That seems like so difficult. From my perspective, that seems like if the Department of Insurance would just get it together and make this more business friendly, maybe we wouldn't have as many issues. Well,
we need more people to speak up to their state officials and let them know, hey, there's a big problem here. This is affecting everybody. Fix it.
I think there's definitely a bigger spotlight now than there ever was before, which in that regards, that's a good thing, minus the fact that they all lost their houses. But okay, let's talk a little bit about, you're a homeowner, you live in a fire-prone area. What should you do? How is the average homeowner going to make a difference in their own situation or in the bigger situation at large? What do you suggest they do? There's fireproofing your house or figuring out the personal property thing. What are the things that they can do to make it a little bit better so it's not as bad for them?
Well, a lot of the insurance carriers have already come out with ways for smart fireproofing your house. So a lot of them call this defensible space. So if you take the house, take the perimeter, they want the first 5 to 10 feet to be hardscape around the house. For example, no trees, no shrubs, no bushes. You could put non-flammable materials around the house. Could be a walkway, a gravel bed, or something like that. So if there is a fire, it's not going to ignite something right next to the house and cause the house to catch on fire. And then there's other things you can do that cover the eaves, fireproofing roofs or fire-rated roofs. Some of the properties I saw that did not burn up, they had metal fences around the perimeter of the property, and they had metal screening so that, the smoke still came through, but the embers from the fire didn't make it through to catch that particular structure on fire. But your house is still smoke damaged. So you could have a perfect house that's fireproof and your neighbor doesn't, and your house will still become smoke damaged. So you have to get everybody on board, or you got to take some other precautions. Some people are putting in external sprinklers on the roof that are activated. It can keep the house from burning down.
Yeah, I know that after the Thomas fire here, because this was our firsthand experience here, it was almost just as bad if your house didn't burn to the ground. The claims, the shortage of restoration contractors, the hassle that came along with it. Part of me was man, it might have been better if this house burned to the ground, because now you're going to get a brand new house. You still can't live in time soon because of the smoke damage. But I did start feeling, it's tragic when someone loses their home, but I almost felt less bad after you saw like the whole process transpire. Like, assuming no one got hurt, nobody died, pets, those types of things, you're going to get a new house. And you're gonna have more equity in it, because if you go up in our hillside right now, there could be a brand new house that was rebuilt after the fire and one that survived from the fire, and there's hundreds of thousands of dollars in difference in the price, simply because one's new and one's old.
Yeah, newer materials, older materials. Yeah, and generally a newer house costs less to insure than an older house, slightly.
Yeah. Well, they have all the fire resistant stuff as well. I think it's important. You hit on it, and I think it's worth emphasizing, is that you need to reach out to your state reps, your state senators, your congressmen. You need to put pressure on the people that represent you so that they can put pressure on the people that control this. And I definitely think there's room for improvement. And if they hear from enough people, and I almost think it's less of a partisan issue, and there's plenty of people from both sides of the aisle who lost their house and are pretty upset about the way the insurance thing is going. So reach out to your rep, be the squeaky wheel, and if everybody did that, I think we could make some progress.
I agree.
Well, let's wrap this up. Sounds like, if I'm hearing you right, it's document the condition of the house and your personal property. Make sure that you are reviewing your policy and that your insurance is adequate, because it changes every year a little bit, right?
Yeah, there's lots of little coverages in the policy you want to look at. Like on a house that was lost in the Atlas fire, I read through the policy with the insured, and we found out that there was also 5% of coverage A, the dwelling amount, for exterior landscaping. So he was happy to get extra money for landscaping.
And I think this is the benefit of working with somebody like you, who is an insurance broker and proactively looks at policies at renewal time and makes recommendations. And that was one of the problems at some point with the Thomas fires. There was a lot of people who were underinsured because they hadn't kept up with, rising rates and costs to build stuff. So review the policy. That's a good takeaway. And the other thing, like we just said, is talk to your representatives. Try to make some noise about this issue. Anything else you want to highlight on before we wrap it up?
No, just take good notes when you're working with the adjuster, and have a timeline set up to work through the claims process. It's going to be a while before I think anyone gets a new house in the ground there. Just while meaning more than a year.
Oh, I think a year would be extremely fast, especially, talk about the planning departments down in Los Angeles are worse than they are where we're at. So I would be surprised if it was 2 or 3 years. But I do want to say, so we are right next door to we're the county right next to where those fires happened. And we had a lot of people coming into the county looking for housing. And I know our company was helping as much as we can to get people housed. If you are in a situation where you have to rely on contractors or remediation contractors, sometimes working with a property management company can make a lot of sense, because it's all about relationships and which vendors can be leaned upon. They typically, they're more responsive to people that give them a lot of work, and management companies have those relationships in place. So if anybody is interested in connecting with us to, at a minimum, talk about that and tips and strategies to get stuff done, we're happy to have those conversations. Curt, I want to say thank you for coming on.
Thanks, Peter.
It's good information. Probably not the most exciting topic to our listeners, but one that is definitely more relevant today than it was before the fires happened. So if you guys like this content, make sure you subscribe, share it with your friends, and thank you for coming on and listening to Curt and I talk for a little bit.